Hello, hello, beautiful people of our trading community. We are starting our live stream again today. Today is the 9th of September. Welcome. Welcome, everyone tuning in. We will have fun together. We'll watch the market, do some analysis, trade if time and opportunity permits, trade live. So, how are you doing today? I see Henry is saying hi. So, we will start. Um, by the way, guys, as the description and the title you may have already read, today we have a special person joining us. We have a great trader. I know you know him already, but even if you, in case you don't, Rich from Take Action Trading. How are you doing today, Rich?
I'm good, mate. I'm good. There's you got a lot of excitement, a lot of energy in here. For a trading day, I probably need to just calm it down a little bit. I notice sometimes when I'm this excited and going into trading, I'm like, maybe I should size up on here. But yeah, super excited to be on today. Just do some top-down analysis, chat about charts, maybe run through some questions and pick your brains. Not often I get to be on the stream with you, so I'm going to lean into your knowledge, mate. Excited.
Sure, sure, for sure. We will do everything trading related, and that will be analyzing the market, you know, getting interpreting what happened Friday, right? NFP, we can talk about that. What's the implication going forward for our trading week? What can we expect? And what are your thoughts on it? What are my thoughts? And what are the chat? Who everyone in the community? What are they thinking? What are they planning? Right? This is a joint effort with the interacting with the audience. So you guys at home watching us or in the office, wherever you may be, let us know in the chat. What are you thinking about this week? I mean, we're post NFP. It's a new week. We only started the month, right? So we are at the beginning of the month, a new week after the Monday after NFP. What are your thoughts on whatever asset you're trading? What are your thoughts on trading in general? Are you going to, now that the storm or the volatility has already come into the market, are you going to be hitting it hard? Are you going to be watchful and waiting patiently for your opportunity? What are your thoughts? Let us know in the chat. So great stuff, Rich. How is this week coming starting for you?
I've got some thoughts. I mean, if you want to go ahead and pull my screen up, I'll show you actually a trade I'm in at the moment. Not often I get the opportunity to be on stream with an actual trading setup that I'm in at the moment. So looking to long Euro USD, and I know a lot of traders will be like, what are you doing? You're going against momentum in the market. I've said it a few times before, either my brain's in upside down or I've found a little unique edge in the market. I'm always trying to fade moves back. So when the market's dropping, you can pretty much guarantee that Rich is buying. When the market's going up, I'm trying to find reason to sell it. So this is what I'm in at the moment. I figured I'm going to have a go at trying to buy Euro USD. And it's actually from a higher time frame. If we look at the 4 hour, we can see that we're right at the pivotal edge of the market. And I've got this marked up as a pretty strong zone. So I'm just kind of looking into this price action right here in this bullish candle. And I'm watching this price action come down. And I'm like, I think I can formulate a risk-adjusted return. I think I can get a decent profit from this trade. So I was down on the 15-minute, went ahead and put on a limit order. This is how I trade. So I like to call it simple supply and demand. There is layers to it. But I'm a supply and demand trader. I trade from higher time frame supply and demand zones. If you forget the name of it, which I'm always doing, it's supply in the sky, demand down low. So if we look at anything above price at the moment, this is a supply zone. We can go ahead and put this on here. So this could be maybe a supply zone here. This is where the market decided to move lower. Anything below price is a demand zone. Looking at the 1 hour, you can see beautiful little demand zone here. I was a little bit in two minds about this, seeing how this market rallied to the high side, wicked down, and I was like, I wonder if we've already taken a lot of the volume out of the market and then the market's run higher. So I wasn't interested in trading from this area. Like I say, there's a little bit of nuance to it when it comes to knowing where to trade from and what zones to trade from. But yeah, just sitting in this trade, I've actually got this interesting little concept on the 1 minute. If we were watching this price come down and we've got a zone that we want to trade from, waiting for the market to swing liquidity one last time and print a pretty awesome bullish looking candle. So I was watching this morning, and I liked how it was printing this bullish structure. I know this is 1 minute charts, but price is fractal. We see this stuff on the higher time frames. That's actually where my trading edge comes from. I use the 1 minutes for entries. So I was the guy watching this on the 1 minute, looking at this bullish pressure, and then the market runs down one last time, and I'm like, well, that's not supposed to happen. And the cool thing about it is we take this low and we print this beautiful bullish engulfing candle. If you were trading a daily chart and all you could see was this, I think you'd be pretty interested in looking at the market from a buyer's perspective. So saw this and I was like, okay, makes sense. Very often when I'm in a trade, I can actually see the market come back and bounce at my entry price point, and it kind of feeds into the idea that if you're a trader and you're afraid of losing, you're probably going to pull your stops up, and you get a nice little rejection like this, and you don't want to lose. What do? You end up pulling your stops up. Market comes down and swallows it up. We've seen it many, many times before. But mate, I don't mean to be off on a rant. You get me talking about trading, and I can chat for days. But yeah, that's what I'm in at the moment. Just along on Euro USD, looking to target up just in front of this potential area up here, 1.3R trade. If I can hold it, I'll never hold it. I'm just interested in scalping the market. But that's my analysis. But what are you looking at?
Nice, nice. I think that's great. I'm looking at. I'm going to show my chart. Uh, this is my chart. This is what I'm looking at. We will do the top-down analysis in a bit, but just to, I'm not in a trade right now. But if anything, this is where. And I'm probably not. My system will probably not give me a signal like in the coming 2 hours. But however, this is the area that I'm looking for, because we have a. And yes, I'm looking for that long as well. Even though the buy is on the higher time frame, you can see if you go a little bit higher, we had some very powerful reaction that came at this price action, right? The high range, wide range price action. We had a rejection of a structure above, which I would be want to say that it's the order block on the H4. And then we had a following order block that was formed on the H4. And since then, we have been moving very, very impulsively to the downside. And so the bias is to the downside. The momentum is to the downside. However, what I do see is a quasi. So a possible reversal. It is a reversal pattern, but a possible information where if this is the last structure to be defended. However, it's only on the H2. It's not on the H4. So that's the reason I'm not going to trade it. That doesn't mean that price will not be able to bounce from it. I can see that from this area that it is quite likely that we might have some kind of reaction. Will it be a little pop? Will be something a little bit more deeper? Eventually, I think it is quite possible that it will break and go lower, but we're just trying to figure out what's the intention of the market just the next couple of hours, not necessarily, in a week time. So that's what I'm looking for. I'm looking for a possible pop from this area on EU, which is, I suppose, the similar trade that you're looking into. Although, but I don't have anything yet. If we go to the H1, we have a bearish order flow still on H1. Nothing yet indicating, that price is breaking structure and transitioning back into bullishness. But it is, this is the area that I would love to see some kind of rejection, some kind of, transitioning where there's a market shift, market structure shift, where, it might do it. And if it does it, then it's a great trade, I think, because it is, the last line of defense for the buyers, for the long traders to defend. If this whole structure, this whole price action that we've had since what is this, about 10 days ago. So it's quite significant. So I'm expecting something here, maybe not for long term, but maybe today, maybe tomorrow, we could have some price action, but it's not happening yet. So that is something that I'm looking for in the market. So Rich, other than the EU trade that you're in, what are your thoughts on where would you be looking for opportunities today? Is it in EU still, or do you have something you're looking at, maybe GU or maybe some other asset?
I've, I've been in the market. Okay, truth told, I've been in the market a few more times today. So I was. If you go ahead and pull up the screen, I'll show you what I was doing. I had a go at buying GU this morning, and it was something like. I want to say it was something like this, maybe. It was. I want to say it was something like this trade here, and it just went straight through the stop loss. Had another go at it, and I said I'm going to have one more go at this, and I managed to catch a long on this low here. I think my stop was about 6 pips. I'll go ahead and track out this trade, and I'll show you. Yeah, it was this demand area here, and I was watching this price action, and I was like, I like the way that we've driven from here. I don't think that we've tested everything that I'm looking for. So I got it wrong on the first time. Ended up managed to catch a nice little trade. I got 9 pips out of it. It was probably so my entry was probably like a little higher, something like this. Actually got a 10 lot position on this, so it was pretty cool. Managed to get $950 out of it when we were streaming earlier. This was pretty cool. And then after the stream,
10
uh,
lot, you say?
yeah, 10 lot, but it's not quite as big as what we were doing the other day. But I don't know if we should probably we probably shouldn't go into. Yeah, I was down about $600 on the day. I took about 6 lots in the previous long, and then I got 10 lots on this, and I was like, look, I'm risking seven pips, which is going to be $700. I'm like, I'll take this loss. I'll be down 1.5%, and I'll call it there. Market retrace, managed to get a nice little movement on it, and then again we've seen this sort of selling pressure come down to the low, taking this low here, and I didn't want to take this on GU because I couldn't find the entry I was looking for based on, like, if we go left, where are we? Like, I'll do it on the hourly, it'll be a little bit clearer. But if we look at like where price has driven down to, like, look at this huge gap all the way down here. There's nothing but one-sided price action. So I liked EU a little bit better. And then the trade I took just after, so trade the DAX as well. Trade GU, EU, and I trade the DAX. But the DAX is a very, very different trading style. Typically, what I'm looking for is overextended moves and a sign of weakness to come into the market. So pretty beautiful run up to the high side. I was cautious that we were going to feel the entire of this selling opportunity. And I was watching the 15-minute, and we get this beautiful engulfing candle close on the 15-minute chart. So my entry was on the close of this candle. My stops was nice and wide, and I was able just to take a little bit out of this. Something similar to that, but nice little, nice little reversal trade. Like I say, I can't follow the trend. They say the trend is your friend until it ends, and then it just is not my thing. I don't trade trend continuations. I trade reversals. It's what I've done for the last 4 years, and it's a real thing. It's a real thing. It works pretty well, but you've got to be really sniper with it, because not every day the market moves like this. If it moved like this every day, it'd be easy to make money out of. As soon as you get like an engulfing candle, you just sell and down it goes for a couple 100 points. But as we know all too well, the market is not designed to give out free money every single day. So you got to work for it. So yeah, that's the 3 trades I've been in this morning, a long on GU, 1 loss, 1 win. I'm currently in EU as a long, and then I took this as a short a little bit earlier on today as well. But that's the one I'm keeping an eye on at the moment.
That's a very nice trade. You said something. I think you mentioned a couple of things, and I think it's a great thing to touch upon them. One is you consider yourself not to be a trend follower, right? You just mentioned that you your trend is your friend, but that doesn't
Not my
hold
friend.
true. Not your friend, yeah,
Not
someone
my friend.
else's friend.
Yeah.
Well, and I think in general, following the trend is easier because it's obvious which side, the side of the trend, is the one that is more powerful, and in general, especially if you have a long stop loss and you are on a higher time frame, trend following is a thing, and it's profitable if you do it correctly. But what you're doing is, how would you call what you're doing? I mean, is it just counter trending, or are you doing something other than that?
I would call it supply and demand trading, but I think when I've had some traders look at it in the past, they said, "You're just an ICT trader," and I'm like, "How am I an ICT trader?" And they're like, "Because you're looking at order blocks. You're trying to stack order blocks on top of order blocks." And I'm like,
Mm.
"But that's supply and demand zones." I was like, "We're just going by different names." So I resonate more with supply and demand. I spent a long time looking at the ICT concepts, and maybe there's an element of them that I use within my trading, but it's supply and demand is so much easier. Like in my mind, I can teach what I do in a couple of hours, at least show you kind of like where I would look to trade from. With the ICT stuff, I really struggle to get my mind around exactly all the PD arrays, which the premium discount arrays. I know there's a lot of different models that you can use. And in all honesty, I think a lot of the time I've probably traded many of these or had a go at trading many of these, but I never attempted them because that's what I learned online. I attempted them because I went and watched price. And it was one of the best advice I got from a friend. He said, just shut up and watch price action. And this was years ago, it's 4 years ago. I said, what am I looking for? He said, just keep looking. I said, but give me some kind of indication. What do I look for? He said, just keep looking, just keep watching. And that's what I did. I sat down for hours and hours and hours. And I was like, this is super cool. Whenever we get these areas in the market where it made big decisions in the past, if we look at like 4 hour high time frame and we look at sort of like these lows and we find like going all the way up here, like highs like this, you'll find areas where the market will come back and probability is ever so slightly on your side. So I actually just watch price, study price for just many hours. I mean, I've been doing this 6 years. So we have this thing where it's like 2,000 hours a year is full-time work. Victor, I'm over 16,000 hours in this thing. I've worked so much overtime. And after a while, you just start to notice things. And then when you notice it, trading becomes, it's, what's the phrase? The easiest, hardest thing you've ever done? Or the hardest, easiest thing? I forget which way around it is. But it's easy to press a button and click buy or click sell, but it's difficult to know when, where, and also manage your emotions when you're in that. So, sorry, long answer, but the short answer should have been I'm a supply and demand trader, and I just identify areas that often traders would go, that's an order block. That's
I understand. But if you could show us the DAX chart you
sure.
showed us before.
This one here. Yep.
Okay, and if you zoom out, I would argue that's a trend trader.
Okay, because you're looking at the higher time frame, lower,
Yes.
pulled back, continuation to the downside.
Yes.
Okay, I like it. And you can also actually mark up this nice little order block right here. We take the last bullish candle before the market sold lower, broke structure. Where did the market go into? And all these kind of concepts, I guess they all work. You called me out on it. I'm a dirty trend trader, and I didn't even know it. But what I was looking for more typically is like, is this an overextended move? Are buyers likely to take profits? Do I have context of where the market's run? From an area where we had a lot of selling pressure in the past, and can I anticipate that there's going to be one or two things happen? Either buyers will take profit when we see a bit of profit taking, maybe the market goes a little further, or sellers are actually willing to look at this candle and go, that's it, buyers are exhausted, we're coming into the market. So very, very easy framework with this is just like looking for exhaustion, looking for a sign of reversal. I've tried trend trading this, and I guess like on the 15-minute, this would be an upwards trend. But on the hourly, we can still say, well, you're still selling lower. So it depends what time frame, I guess. Depends what time frame you're looking at.
That's what I was going to say. I don't mean to say you're a trend trader because I say so, because I recognize anything. But I mean, it's all about the context. Because what if I see this, I could say, well, what you're doing is you're trading with the trend, not necessarily the whole trend and holding it all the way through the next swing point, but you perhaps without knowing, or perhaps maybe it's just a coincidence, but it's about the context, because you could use the trend as a bias, and for your scalps, and does that make you a trend trader? I don't know. It's all about in the labeling, right? Because I would say yes if you're considering the trend in your analysis. You're right. You don't have to hold it through the whole movement. Just the fact that you're taking into consideration the direction of the trend, it makes you kind of a trend trader as well. And it's not about having a label or not. What kind of
Mhm.
which box do you put yourself? It's important to know yourself, and this goes for everyone watching us. It's important to know where are your weaknesses and where are your strengths. What do you do well, and all of that. But in the end, uh, um, labeling is sometimes is good to recognize things, but we shouldn't lose ourselves to say, okay, I am or not an ICT trader or a trend trader or whatever trader. Um, you know, because in the end, it's the trading that's matter, and whatever you call it is, secondary. It's the actual reading of price action, and that's what you're doing. And if people think that's ICT, then perhaps it is, and maybe it isn't. I don't know, and it doesn't really matter. In the end, is that you're able to read the market, you have a read on the market, and that's the same with the I trade the order blocks. But to me, and of course that is considered something close to ICT, although I don't necessarily consider that to be the case. But it doesn't matter. It's about reading. I To me, order blocks are supply and demand. So I am a supply demand trader, and that's how I see myself. And I can call it whatever I wish, or and everyone can call that whatever they want, as long as we understand what it is and how to recognize it and what it means and what can we do with it. That's
Mhm.
what really matters. The actual name, the label we put on it, is not as that important. I think it's not that important. So, but I like your detachment from those labels, because that's what you show. You're free to in the way that you're doing it, not putting yourself in a specific box or whatever.
Hang
So,
on, but that freedom comes with a little bit of a cautionary tale, because when you
mm,
decide to venture out and go, I officially am a discretionary trader, or I trade in ways that make sense to me. That's actually what's listed in my trading plan. Rich, does this trade make sense to you? This trade made sense to me. If it goes to stop loss, it's still going to make sense to me. So the cool thing about this is, like, it's nice to be free of this title, but the other side of things is you can now act in ways that probably you shouldn't. So I do like a rules based system, because it keeps you on the right side of knowing what you should. You can go back, look at your charts, and say, actually, I should have done this. I should have taken this trade. This was a valid trade. That was a valid trade. If you can do a back test and 95% of your trades, you would agree with no hindsight that you would have taken the same trades, you're a rules based system. So with my trading, a lot of the time I'll look at it and go, I'm not sure about that. Maybe that's something that, yeah, it feels okay. I'll just put it in on a lower value account or something like that. So you definitely have a lot more, I think, room to grow psychologically when you don't have a simple to follow rules based system, because still within this, there is a little bit of discretionary. But does it matter? I mean, I've got a question for you. If you could lose all the titles and you were just profitable, would it really matter what you called yourself?
exactly, that's exactly the point. It doesn't really. You're not here to get a label, right? You're here to trade and
True.
be profitable. So and sometimes, and that's the point that I think I was trying to make, that sometimes we and I've been a victim of that as well. We lose ourselves a little bit in the labelings, and losing sight of what's actually important, which is the edge that you get, and the ability you have or you're working on, and whatever label that is fine, and it's of no consequence, to be honest.
No, no, as long as it makes a little bit more than it loses. Still, I can't pick winners. I can pick winners over 100 trades, but I can't pick winners over on a single trade. So just, does it make sense? Yeah. Just quickly, I see Alex is saying, Rich, can you say it's similar on the Dow Jones, or do I not trade that one? So I back tested very similar to what I do on the DAX. Took me 120 hours of studying to try and figure out exactly where I wanted my stop loss, where I wanted my entries. Now that I've got that, I have had a look at the UK 100.
Hold on, hold on. How many trades that you mentioned?
Oh, sorry, it took me 120 hours.
120 hours. Okay,
Yeah,
listen
120.
up, guys. 120 hours. How many days did this take you?
120 hours. I'd probably say this was about 5 weeks work.
Okay.
Yeah, it was. I worked on it pretty intensively, but everything about it was profitable. But what I was trying to do was maximize, like, exactly where do I want my entry, where do I want my stop, do I stage in, do I put one entry, do I have a really tight stop loss? And even now, like, I've been trading this thing all of last year, all of this year as well. Been funded with it. I think I shared it before. I got funded, got 6 payouts with it as well. And I was like, okay, this is a real thing. I'm now going to move this into my main trading account. So it took 120 hours to figure it out. Then I bought a tiny account because I wanted to forward test it and make sure that it actually worked and I could execute on it the way that I thought I could. Made all the profit targets, got the live funded account, and then went on and took 6 consecutive payouts. The account would still be available today, but I don't trade the account anymore. But what I did is I used the payouts and I then scaled the accounts with 5ers accounts. So now I'm actually trading my main strategy, my main master account, and all my bigger accounts with this. But that whole process, that was like 6 to 7 months of testing, trialing a system, trading it live in a very small isolated capacity, recording all my data on it, and then going back and saying, okay, I have a track record that proves I've got a profitable edge. Now let me put him in my master account. So it was like that delayed gratification, making sort of like $10, $20 a day whenever I was trading, and then going, obviously it doesn't always work like that. You know, when I lose, I lose. But the cool thing was I was able to look at the track record and go, wow, this has given a pretty awesome return on investment based on the purchase price of that account. Now I'm going to go and compound it into a bigger account. And yeah, that's what I do now. So now it's like I took a trade this morning and it's a little bit bigger than $20 and $30. So, but it just takes time to get to that point.
I think what's I like how you described the process that you went through. What I really like even more is the time it took you, the whole process to think up the idea, test and optimize the entry stops, and I'm sure you tried different settings and different things to get to your optimal settings or your trade plan. And then you went on and and then you went for months trading that and refining it, tuning it until you, after I think you mentioned 6 to 7 months later, you concluded this is something, this is real, this is not a fluke, this is not coincidence, this is not luck, this is actually something I can build on. And this is, I think, important because, as you mentioned before, what we're doing, trading, has that image, or has that, you know not stigma, but the idea, a lot of people see it as something easy, something you go to the market and it's an ATM. You just know how to press the buttons and it will spit out money. Right? That's the idea. A lot of people, especially if you go on social media, and while that is an illusion, that's so far from reality.
Yeah.
It takes many hours, weeks and months to get to something. And would you say this 6 to 7 months, would you say this is your experience with the other strategies or other edges you have? Is it similar? Is it, is 6 7 weeks, months, is it long? How does it compare to the other ones?
Victor, you know the story, but I'll share it just in case nobody has heard this, and I think you're sort of setting me up a little bit here. I had a little over 300 individually tested systems and spreadsheets that manually I went through. I'm not a coder. I don't know all that stuff. I just manually sat down at the charts and just said, I got an idea. Every time I see X, I'm going to do Y. I'm going to record the results in a spreadsheet. Let's go. Let's see if we can build 150 trades, see if we can figure out some kind of reoccurring theme. Yeah, I had over 300 tests of this, and I threw away about 230, and I had 70 tested systems that told me something about the market. And we're talking about like a sample size that would be like 300 trades, 400 trades. So when you had a simple filter column and you filtered something through a yes and no situation, and you removed everything from the no column into like a break even, and everything then in the yes column become averagely far more profitable, you got such a big sample size, you're not curve fitting. So it's like, okay, why would this be profitable? So I started to learn a little bit more. And then as I learned this stuff, I started to go, well, I've got this kind of cool trading edge. It works, but why does it work? Can I use the truth of why it might work and redesign my entry criteria? Now I'm off again, back doing another back test. And even now, like, been trading 6 years. For the first 2, I lost a huge amount of money. This is why when I forward test something, I do it very carefully. I see in the comments, it's like, so Rich, you went in with low risk first. I went in with high risk, but on a low value an account. So it wasn't like I was risking a big account. I went in with a small account, and then I just used a moderate level of risk. And I was like, if I burn through this account, it shows me my system doesn't work, or I can't execute on it the way I thought. But yeah, it took, I'd say, 4 years. I've been working on my trading edge now. And even now, I'm actually trying something a little bit different. And I'm trying to get 10 pips out of the market every single day as an average. I trade risk to reward. Like this trade here, it's just a nice clean risk to reward trade. But what I'm trying to do is go, can I actually take 10 pips out of the market and scalp the market? So rather than kind of taking these kind of trades, pull my stops up, kind of like this, and see if I can, when I'm wrong, I lose a few pips. When I'm right, I'll make a few more, and see if the net result is 10 to 15 pips a day. So I'm always experimenting with new trade ideas. I'm always trying to learn, what I've already got. Can I reframe it? Can I make it a bit more? And I blame that big account, Victor. You know what happened on that, where we were trading much bigger size. And I was like, I'm going to try and scalp in a way that I never have before, but I'm going to use my experience of price action. And it was pretty interesting. We'd done some work, and I saw you were trading similar size as well. So yeah, it was cool. So I'm trying to implement that on one individual account I have, because again, I don't want to bring that kind of behavior into my trading. But to answer your question, I see I've taken the long way around the roundabout again. But to answer your question, no. Typically, if I'm studying a concept, I can be into it for 300-400 hours before I really abstract enough value to say there's either nothing here or something that I'm willing to actually put to work in a live market. So I was happy. 120 hours, man, it felt like part-time work for me. I was happy with that.
You said around 400 hours. I mean, that is how I know trading. It's a lot of hours, a lot of sacrifices, a lot of you know how do you say it, the blood, tears, and sweat into it
Mhm.
before you can actually enjoy the benefits of it. And that is something that I miss every time I see, I watch other things on social media. They and this is, I mean, it's not as a criticism, but I mean, it's something that I miss, in the authenticity, the reality. At least how I know it is that it takes a lot of work, and it takes time, and it's not as easy. Very rewarding in the end when you get there, but nobody tells all those thousands that didn't make it in the process. You only see the ones that made it to the other side and are successful, earning this or that. But the process, the majority didn't make it, and that's for a reason. And the reason is, it's simply a lot of time, effort, and you're not even assured anything in the end. You may put in 400 hours and conclude none of them have any edge. That is also possible. There's no control you can have on what the results are from that exploration, because that's what you're doing in your data. You're exploring your data to find anywhere if there is or not an edge. But I think we have a couple of questions. I think it would be great to touch upon them. Let's look at the chat, guys. Everyone, remember, hit the like button if you like our discussion today. If you like the fact that you in the audience can put a question in the chat and have us, experienced traders, profitable traders, funded traders, answer those questions and give you an insight, right? Doesn't happen every day. Maybe you don't know that many traders. You get an opportunity now to ask us, someone who is, in the business for longer, perhaps, maybe, I'm not sure, but maybe longer than you, and you can tap into our experience or just have a different perspective on a subject. Put it in the chat. Yes, let's do the questions. Actually, before I do that, there was something I wanted to say, because I saw, uh, yes, I think it was last week. I was looking at a YouTube channel, which I will let me see, which I will put in the chat, and I was watching a very interesting video that I was watching. What you guys what you see from Rich and this conversation is that it is, this is, to me, the reality of traders. And if you want to see more of that, Rich has a YouTube channel called Taking Action Trading, and I will send in the chat the let's see, did I put it in? Yes, I will put it in the chat for you guys to go check it out. He has done a summary video on all the programs that the 5ers offers, and goes through all of them in great detail. And I think there's a lot to learn there. And I think you even started some challenge, right? You started a very interesting challenge. Could you tell us a little bit about that?
Yeah, it's put me on the spot a little bit. So I figured, like, you know what, I want to try and make trading a little bit more relatable. And so I've got a small YouTube channel, as Victor said, Take Action Trading, and it was a reminder. I created the channel as a reminder for myself to take action. I didn't want to be stuck in this idea of like, hey, I got an idea about how the markets can move, but I don't know when to click buy and sell. So it was like, Rich, go and do that work. Go and figure out what it is you need to learn from the market. So I created this channel as like a reminder for myself. And it's kind of, as it's grown, I think it's close to like 300 subscribers now, and it's, I mean, it's a massive blessing to be like that many people are watching the content I put together, because sometimes it's just kind of how I read market structure, or actually this trading account I've taken on at the moment. I've got this small account with the 5%. It's a $5,000 hyper growth account, and effectively, I'm going to try and take that account and I'm going to grow it. And I'm going to be transparent about it and trade my main system with it and just see if I can slowly build it through the stages. But it's such a, I think the reason I've done it is because it's not like, hey, look at me, I'm going to get to 4 million next week. It's more because I want to show the transparency about what goes up. Sometimes you get drawdowns, sometimes the balance goes down. Been trading this account probably close to 3 weeks. Spoiler alert, it's about $10-15 in profit. Like, welcome to the world of trading. The real reality of trading is to actually have an account, manage risk, and be like, my drawdown on that account, that's the amount I can lose. I got $300 I can play with on that account. I'm not going to be sending it in with $100 risk, $200 risk. Sure, I wish I did on this trade, but that's a part of trading. So it's actually showing the sustainable, hopefully the sustainable journey of trading, and seeing whether or not I can grow that account from 5,000 to 10,000. So made a little video about it. It covers all the 5ers models and why I've got the account I've got, but it also gives you an opportunity to follow along in the journey and see if there's something in there that resonates with you. And then most importantly, if you watch it, take action, find something that will physically help you as a trader, and go and do the work. No one's going to knock on your door and go, guess what? I've got this amazing strategy. In fact, I'm even going to click buy and sell for you every single day. I'm even going to purchase an account. Trading takes deliberate practice and deliberate work. It's actually, and I don't want to trigger anyone, but the act of trading itself is easy. The difficult part is I believe we humanize and we get involved in our emotions. We can see this trade on the screen. Mistake profit on this by half a pip. I think the market will start to sell close to this area. I'm really stretching the trade. I want to just go on my account and just grab my profit off the table. But that's not following my trading plan. So it's a reminder to like trading is simple when you're not actually when you're not doing what you should be doing, just clicking random buy and sell. Trading is simple, but to do it well is to listen to that inner critic, that thought in your head that's designed to keep you out of trouble. Watching this trade that could be $1,000 in profit, could be 10,000. No, it's more like $2. But watching this trade and then going, you know what, I'm just going to close this because of how I feel. Trading is such a like a feedback loop, and all the time we're taking trades because of how we feel about a situation. We're extending our stop loss because of how we feel. We're grabbing extra profits. We're getting greedy. We're going for like 3 to 1, 5 to 1, 10 to 1 because we just want to be able to flex on an account. So it's just about trading systematically and just saying, is this a valid trade? Yes. Would I be happy for this trade to hit my stop loss? Yes, because I followed my processes perfectly. That's the hard bit, is to be disciplined, because in trading, you're your own boss. Victor wakes up in the morning and he's the boss of his trading accounts. If he wants to send it in one day, he can do it with no repercussions to anyone else other than himself. And a lot of the time, and this is the harsh reality of trading, we're not disciplined enough to act in an environment where we have unlimited control of creativity. I can open a 15 lot trade just because I want to. That's a horrible position to be in, because if you don't have the discipline to catch yourself before you act, you're in a world of pain and you didn't even mean to be. So yeah, lots of discipline in trading. Don't mean to rant about it, but if you're a trader that's serious about trying to actually find actionable steps and be encouraged to put in a little bit of work, that's the kind of content I try and create on there. We can trade for fun or we can trade for a career. I'm doing it as a career, not for fun. I
Well,
try and have fun along the way.
well said, Rich. So everyone, if you're interested, as Rich has explained, if you're interested in watching this experience, this challenge, and learn more from Rich, go to his channel, subscribe, and be part of that group of people, right, where we are focusing on being real, authentic, and great traders, not just doing it for fun. No, as a career, something bigger, something that can be life changing, not just entertaining. So I see that we can see that your trade is almost hitting your TP, and I like how you mentioned, will I be happy if this trade goes to stop loss? And everyone is at hold on, happy stop loss. Those two things don't go together. But you said it just right. Following the process, that's way more important than the
Mm-hmm.
actual results you get from this trade, the next one, or any specific individual trade. It is following the process, and that should make us happy. And I like what you mentioned right there, because it resonates how I see things. Right? It's not about this trade. This trade is just one-off thing, one incident. And what we're interested in is the consistency of trading, executing a plan, right? That already knows that we're going to be hitting stop loss from time to time, maybe even more often than not. Like in my case, that's not where we should put our focus, but on the execution, the consistent execution
Mm-hmm.
within our risk parameters, and that should make us happy. And hitting stop loss is part of the plan. It's not, you know, it's not what we want, but we know this is going to happen. It's a game of probabilities. There is no 100% chance trades. Nothing is guaranteed in the market. So we know that a portion of our trades will end up in losses, and that is okay.
Yeah, how you adopt that mindset is give yourself the full insights of your trades. So imagine this: we've got this trade on the table at the moment, right? So I'm going to go to a spreadsheet and I'm going to write in my entry price, my stop loss size. I'm going to write, did I make half an hour, 1 to 1, 3 to 1, whatever the criteria. And then what I'm going to do is I'm going to record what I did in that trade. So imagine I closed this trade right here, and I just said, "Oh, I was pulling back. I'm super scared about this. This could reverse. I actually think it might reverse and go lower. I'm going to close this trade at a 0.86R. So if I'm risking $1,000, I made $860. Now imagine you had a column next to it, and that column records the end result of what it should have been. Either it hits take profit or it hits stop loss. Now, you do this for dozens and dozens and dozens of trades. And imagine you looked at your spreadsheet and you go, I'm up 9R this last month or this last 2 months. I'm up $9,000. This is amazing. Now, imagine you looked at the column next to it and that column showed you what the result could have been if you didn't humanize your trade. Now, imagine you're up 17,000, 18,000, 20,000. You're going to become miserable. Even though you made $9,000, you're going to become miserable because you're like, look at the opportunity cost. So the biggest opportunity cost for me is TP or stop loss. Just hold it for my take profit, hold it for my stop loss, and I do not touch that trade. This is in a perfect world. But then I'm also human. And sometimes I do look at stuff like this and go, here we go again, get my hopes up, roll back over to stop loss. And then I react. And what we don't want to be as traders is react. As Alex says, stick to your strategy, just follow your rules. And how cool is that? After 3 months, you can look at it and go, my strategy doesn't work, but I traded it like a professional. If you do that, you've given yourself the insights that you have a buy and sell problem. You're buying in the wrong place. You're selling in the wrong place. Your stop losses are in the wrong place. Your take profits are in the wrong place. There's nothing more frustrating than having a you problem in the markets, because you've got to go into that trauma, that experience from a childhood, and you've got to go and fix that. And you've got to, we're not conditioned to be like, I said this before, Victor, you walk down the road, you see 50 euros. What are you going to do? You're going to look around. You're going to go, maybe that goes in my pocket. Okay. You're in the market, you suddenly see 500 euros start going in profit, start pulling back to 400, 300, 200, 100. As humans, we're not conditioned to be able to say that's a good thing, because in the real world, it's not. You've just watched that thing that could have paid your bills now roll over and probably head to $1,000 loss. That's where we need to navigate that space as the emotional side. This is effectively what we call psychology. And if you have a simple rules-based system and you say TP or stop loss, baby, then you get the result of TP or stop loss. You either have a strategy problem, and then you go and back test and figure out like the new trending strategy to hopefully fix it all, or you get paid for it. That's the way I've managed to make the gains I've made, is by being objective. Every time I wander away from the plan, I get stung by the stinging nettles and attacked by hornets. So TP or stop loss for me. And over time, you gain so much insight to it, you're comfortable being in the trade, because you're prioritizing your process rather than the P&L.
Nice. I think you're hitting some great points there for everyone who wants to grow as a trader, who wants to build discipline and consistency in the trading. These are, in my opinion, things they should be focusing on. So great. Now we have a user here who is asking us, who is presenting the following problem. Abdullah is asking us or telling us, I'm in the 6 trades losing streak. That gotta be heard, right? That gotta hurt. Is it the market condition or my strategy? Because in my back testing and forward testing data, I never got that big losing streak. Is it normal? A trader like this, Rich, how would you respond to this following question? How would you go about to know if it is market condition or is it my strategy? And this person is only gave us these 2 options, but I would assume that he didn't mention it, but there's also a execution problem, right? Because you can have also, you're not following the plan. That's a third option that wasn't here. But how do you go about finding out what is it that's wrong when you're getting results that you haven't got in your testing phase before?
First thing, go back, have a look at them 6 trades, and just affirm that you're 100% happy they meet your entry and exit criteria. If you can chalk them 6 trades up as good losses, then you say, okay, there's not an issue with me. I've taken 6 good losses. I'm happy with that. Next thing, I would then move into looking at your take profits. So most traders, from my experience, they're trading at positive risk to reward. So if they're risking $1,000, they're trying to make 1,000 or more than 1,000. Not many traders that I've met are actually trading like this, where they're willing to risk quite a bit to make quite a little. So we're going to say for this example, you're trading at 1-to-1 risk reward. Now, a 1-to-1 risk reward strategy might have a 65% win rate, which means it is statistically normal in a big sample size that you're going to go for a 10 trade losing streak. Unfortunately, that's just how the maths works out. You can get all sorts of fancy calculators online that will tell you how this stuff works. And a 10 trade losing streak could be normal based on your win rate. When I trade the DAX, I have about a 92% win rate. Why? Because I'm trading it like this. It's not hard to make a little bit when you're risking quite a lot. So my risk can be higher, and I've never taken a losing streak bigger than the last year and 3/4, bigger than 2.5R. That's my biggest losing streak in 2 years. So I know that I can risk big. So understanding your win rate based on your TP targets, if you're a trader that goes for 3-to-1 risk reward, your win rate's probably closer to 30, if not 40%. If you have a 50% win rate at 3-to-1 risk reward, that's mega. But understand you can go through probably 10, 12, 15 losing trade streaks, and they're going to suck. But that's the reality of trading bigger take profits. If you're willing to hold on to that trade for a bigger target, naturally your win rate's going to be lower. So first of all, just make sure that you've executed everything according to your plan. Make sure there's 6 good losses. Second of all, consider reducing your risk. This will help your psychology to continue executing moving forward. And then third thing, understand the probability and the math behind your risk to reward model, and understand that it's okay to take 10 good losses. And hopefully your data is up 150R. And if you've just taken a 6 trade losing streak, you're now up 144. So that's what we're looking at, the bigger picture. Sometimes when I hit losing streaks, I go and just sit in my data. I open my spreadsheets on both monitors and I just look and I go, you know what, this 6R drawdown, it's not too bad. I'm up 25R, 28R, 100R, whatever the case might be for that strategy. I give myself the opportunity to look at the big picture and remind myself that this is just a tiny pullback before that next climb higher. So that's what I would do if I was in that position. In fact, that's what I've done many times.
Nice answer. I will add to that is, if you're saying to this, Abdullah, if you're saying that you haven't measured this in the back testing and your forward testing data, and as Rich said, you made sure that every trade, every one of those 6 losses you had were part of the plan, right? So it's not something, you're a deviation from the plan that caused the losing, the losses, but it's actually the well execution of the plan, the signal, the valid signal that resulted in these losses. If that is the case, I would ask, how far and how much data do you actually have? Because everything we measured, right, we think there is that illusion that that's the only possibility. Let's say if you measured you did back testing 1 month or even 3 months, and you have forward testing of 1 month, you have a data set of 4 months of data, and that could be, depending on how your trade frequency is, it could be 50 trades, it could be 100 trades, it could be, whatever number, depending on the strategy. And that is a limited, you're only watching a little period of all the possibilities, since typically we wouldn't be able to do like 1,000 or 10,000 trades, because it's too time consuming. That's why it makes a lot of sense to be aware that what you measured in your testing, back testing or forward testing, doesn't matter, is only the measured max drawdown, or in this case losing streak, is only a tool or an approximation of the actual max loss or the actual losing streak that you will be having in the future, right? So it will be perfectly normal that you will, given enough time, have you will measure a bigger number. So that in itself doesn't mean that your system is broken. So that's something to consider. And when you think about this, and I've talked about this a couple of times on our stream, this is the reason why it makes sense that you build in some buffer of safety in your risk management, because it's based on what you've measured in the past, but that which you measured in the past is only an approximation of what you will face in the future. So you don't really know for sure how much it will be. If you measure, I don't know, you have a drawdown of 10R, it's perfectly normal that maybe in a year day time or 6 months time, you will exceed that 10R drawdown, right? So you have to build that in your risk management. But well answered, I think, Rich. There is another user here asking you, how many pairs do you trade, Rich? I think you mentioned that already, but let's let the audience know, how many do you trade?
In a course I bought 4 years ago, it's the last course I ever bought. I've only bought 2 courses, and we were taught to trade pretty much all the Forex pairs. I think it's 25, maybe 26 pairs, including the minor pairs. So minor pairs are anything without the USD. And what I noticed was most of the profit was coming from the dollar pairs, so major pairs. And I pivoted my trading into trading just 6 major pairs. I couldn't get any profit with USD JPY, so I traded EU, GU, NU, AU, USD CAD, and USD CHF as well. So 6 major pairs. And then I found out after a little while that most of my profit was coming from GU and EU. And I thought, well, this makes sense because I think they're the biggest part of the Dixie. And so maybe EU is steering the market, maybe GU is steering the market. And I started to notice these little correlations that when I took trades like this, often I would find volume around my entry and I'd be like, that's pretty cool. But when I was in an NU trade, this would happen. The market would just kind of oscillate around. And when I looked, it went up, but it went up because it made more sense that like GU or EU was at a price point. So I actually transitioned my trading into only trading GU and EU. And I heard this trader that was talking about being a specialist. Let's go ahead and just put that up there. And they were saying they only trade one pair. But I found that my trading edge, which is supply and demand, works on GU and EU. So I'm like, well, I'm just going to trade that. And then when it goes a little bit slow, I'm like, well, give me a second trading edge. So that's when I then discovered sort of like I want to trade an uncorrelated asset in a totally different manner. And then I started to look at the DAX as well. So just 2 currency pairs and the DAX, but this is subject to negotiation. If I find something else, if you give me some real exotic pair and I can find an edge on it and the trading conditions are good enough, you can bet your bottom dollar I'm going to go and trade it, because as a trader, my job is to try and find what's moving and figure out how to take advantage of that movement. But for now, it's just GU and EU, and I'm happy to do that until the edge either drops out of it or I find something that complements it. I don't think I'd truly move away from it.
Nicely said. I actually have another question. Do you think, which is everyone in the chat, let us know your opinion on this, but do you think that supply and demand, if you're trading like this at supply and demand, is your strategy is based on supply and demand, do you think the edge will eventually erode in time? Yes or no? Let me know in the chat what your guys think about this, because this is I mean, that's the basis of a lot of, if not the majority of the trading strategies, right? Supply and demand in different shapes and form, but they're basically, resistance and support, kind of ideas or concepts built into them, into different strategies. But what do you think, Rich? How would you say, if someone would ask you that, would a strategy based on supply and demand be vulnerable for erosion of the edge as time passes, or not?
It's
Or
vulnerable.
Go ahead.
Okay, it's vulnerable to global events. So when you have a price point, you think, I think the market will bounce here. When you have a big global event that's creating either fear or greed, price is just going to turn around and go, see ya, and it's just going to go down, because you've got massive amounts of money moving from risk on to risk off assets. And sometimes people want their money in the dollar, they want their money in gold, they want their money in an index, maybe bonds, stuff like that. Do I think the edge will erode based on the components I've used in it? No. The edge, okay, truth here, I call it supply and demand trading. The edge is built on what I believe to be the psychological impact of how we behave as humans. Will that ever change? Evolutionary, I think it's been the same for years and years and years. Only difference is in the last 100 years, we now communicate with our thumbs through these things, phones. And that's something quite new. But how we think, how we feel, how we act, when someone writes you, when someone wrongs you, how you feel about that, the emotions you feel. I think the markets are still going to be a place where people go to manage risk or make profit. Notice what I said there: manage risk or make profit. And this, in these behavior patterns, you're going to end up with supply and demand areas. They're going to be interacted with in a way that people are trying to manage risk or make money. So my thoughts are we going to change as humans? Probably not. So will the markets change? Not. I think I might have to maybe rearrange the ingredients in the plate a little bit and maybe serve it up a bit differently. But I think the core components as to why I trade the way I trade, it's based heavily on psychology, and I don't think that changes. That's a super cool question, but I'd love to hear your thoughts on it.
Great, great. I think what you said, I wouldn't have said the same thing at least not in the same words, but it is in essence the same. To me, supply and demand, and I could ask the same question, just change supply and demand with order blocks or quasis. And because those concepts, they're based on the same thing. It's based on human emotion. And that's the reason why in order blocks work. That's the reason where supply and demand works, right? How do people feel when it comes back to a certain level? How do they perceive it? And I think that is something so basic, so fundamental. I agree with this user saying, no, it's not going to change through time because it is too fundamental. And I think that's it. It is in the essence of a free market where you have both sides, a tug of war, both sides were trying to, read into the market. And when they're wrong, they're going to react a certain way. When they are right, they're going to react a certain way. And that's a expression, and that's price action to me. It's an expression of, group psychology. How does this group think, feel, and in terms of greed and pain? Where are their pain levels? And that's what makes a supply zone or a demand zone what it is, an order block as well, since I see those two things being the same. An order block to me is a form, an expression of the same thing. It's one side of the participants defending an area when it comes back. And that's what makes it, a demand area. There is demand there because they are invested in that era. They bought it previously. When it comes back, they would have the same indication. Okay, this was previously bought, so it's likely to be bought again, and we're going to buy it again. And that what makes it a demand. Everyone sees that demand is coming in when it comes. So I think that my opinion is that supply and demand I'm completely agree with the trading Z lot here. Supply and demand is the basis of economics. It can't go anywhere. I agree. Things will change. Like the zone will be invalidated with time, and there will be, geopolitical things change and everything, and our expectation change with time. But the mechanics of how price action works, based on those emotions, I think is something that is, I believe, in my humble opinion, that it's here to stay. It's not something. So if you base your strategy on supply and demand, I think you will have to adapt with time. But there will always be, it's always be a concept that edge can be found in there. You can extract. You just have to maybe switch things around a little bit to adapt to different market condition. But it's something that is going to be very resistant for erosion. Let's see who else responded. We have Alex here saying is basically a question of technical being vulnerable against fundamental. That's the case. What you said, where a market event, a global event could happen, and then where the supply demand no longer are as important in front of a huge geopolitical or a major event. I think that that's what he meant. Let's see. We have a. I think we have a one answer here. I think there's a Alex saying. I think there is a potential threat of playing a bit with true supply and demand by shifting them temporarily by big malicious traders, plays with help of IA and super speed trading. Well, sure, perhaps. I'm not too. I don't know how much this threat is, but sure, I can see people having different ideas. Um, all right, so we got a couple of answers there. Very very interesting. All right, so let's look at the market, Rich. We just went through the 1 hour mark of our live stream. Let's look at the market. Maybe I will. Would you like to do a top-down analysis, or should I? Should I? I see all kinds of arrows on your. What are those arrows? What are you doing?
I'm just playing through some ideas, some concepts at the moment. So
Okay.
we got the we got the 15-minute chart, and we were heading
Okay.
back down, and I was asking myself this question: will we bounce at break even? Pretty much looks like the market's come back down to this break even level. Found a little bit of buying interest, which kind of feeds into the idea that, you know, scared money don't make money. If you move your stop to break even, there's a good chance you can. It depends on where you trade from. Typically my entries are they're interesting price points where the market is quite interested in being at that price point more than once. So I like the idea that the market can come back and bounce. I actually thought this was the bounce here. I thought we're driven up, we'll have a bounce, we've gone higher, market's come back one last time and pretty much hit closer to that. I do think we are not going to push through this area up here. So if you ask me where we think we're going to sell from, it'll be right here, which actually feeds me into the idea of order blocks. What's an order block? How do you find order blocks, and how do you stack all of these confluences on top of each other? Another word for order blocks is supply and demand, but order blocks I think is much more universal. So I'll kind of run through how to pick up these. Can do a top down on EU if you like. I've got the pair on the screen. We'll give it a second. We'll see if we can just target
Sure.
this. Sorry.
Before you, yeah. Before you do the analysis, could you go over the reason again why you went long at the place you did?
Yeah, sure. I'll go ahead and get rid of this. I was wrong about this idea. I thought we could pull back and continue lower from this price point. Glad I weren't dialing into the lower timeframes to make a decision on this. So this trade idea here comes from the higher time frame. I'll show you the hourly chart. It'll just be much easier. So if we're looking at the hourly chart, we can see that this is the lowest point. If I put a line on the chart here, this is the lowest point the market has ever gotten to. So not ever, but this is the price point where the market up and started to make bullish pressure from this level. So we can see that this is where the buyers said to the sellers, you're not going any lower, and we're driving higher. So if we look at this level and you see that you have a break of structure on the hourly here, this is where the buying pressure started. So a nice simple way of reading order blocks is to follow the move back and look for the last bearish candle that you find before that drive up. And when we highlight these bearish candles, they become very easily just supply zones or demand zones. In this case, it's below price, so it'd be a demand zone. So we highlight the candle from the top to the bottom. And what you find a lot of the time is the market will run away and be quite interested in interacting close to these price points. Now, there's a bit of a theory here. Some traders say, why would you look at a bearish candle if you're trying to buy? And other traders would say, well, in fact, you actually want to look at the bullish candle, which is this candle here, this white candle, because this candle here is where the buying pressure started. Other traders will be down on the 15-minute chart, and they'll be trying to find, like, you know, the ultimate fair value gap within this price point. They'll be trying to find PD arrays and all sorts of stuff like that. But talking very, very simply, one of my first ever trading systems was on the hourly chart, and I was just looking for head and shoulder patterns. And you can see you've pretty much got it here. You've got a left shoulder. We come down, we formulate a head. This is an inverse head and shoulder. You run higher, and then you come back and you're anticipating that you're going to print a left shoulder. So the general idea of this, if I can get a drawing tool, is market structure goes down, goes higher, wicks the high from this area here. Super interesting. Market comes lower, wicks the low from this area here. Market can't figure out where it wants to go. And what we do as traders is we wait and we wait and we wait until the market decides to make the move and then goes in the intended direction. And often when you get that move, you can look back and go, I got an order block. And our job as traders is to try and interact with this information and go, well, how can I use this order block? And a lot of the time you'll go, well, here's an order block. You've got a big, like, bearish candle. I can't draw straight right here. Well, surely that's an order block. Some traders will say it's an order block. And then you continue higher. And once we break this high, traders will say, well, this is an order block. And then you break this high, traders will say, well, that's an order block. So it's figuring out which order blocks you want to trade from. But I think for me, I don't like trading in the middle of a range. This is the low. This is where I want to trade. This is mid-range. This is mid-range. A lot of the time, the market will come back and struggle to break through areas like this and then at least bounce. So part of being like a supply and demand trader or an order block trader is trying to figure out where's the highest probability order blocks that we can trade in the market. Victor is an absolute wizard at this. Don't believe the lies he tells you when he goes, well, you know, I've got a bit of experience. Victor is legendary at knowing how to interpret order blocks. But that's all I do. I just look for the very edges. So we look at the very top here. What a mess. I couldn't pick an hourly order block in that. If I had to, it would be something along the lines of this last bullish candle, which is absolutely horrible. I'm not going to trade that. So I would jump down to a smaller time frame, the 15-minute, and we can see it's still exactly the same. I'd then jump down to the 5-minute, and it's still looking exactly the same. Don't try and pick order blocks in news candles. But if you're trading 5-minute charts, you can look at this multiple leg up to the high side and then just follow it back and take the order block from the lowest possible area and just play around with it on the charts. Just go and chart them up and say, look, we started breaking up to the high side. I've got a video that shows how I read structure. This is my structure point. Just follow it back until you see a bullish candle, either this candle or this candle. Once the market gets up to here, well, this was the last selling pressure, which basically means it's the decision point. And this is the last buying pressure where the move started to move to the upside. Mark them up and just have a look. See what happens when the market comes back into these zones. Can you find a 1-minute entry? Can you find a 10-minute entry or whatever your edge might be? But often what you'll do is you'll look at these areas or these zones. I'll mark it up exactly. I'll give you a little clue. Don't look at the bearish candle, look at the bullish candle. And I'm not going to say any more than that because it took me a long time to figure this stuff out. Here's your bullish candle. Wait for your higher time frame structure break. Market wants to go up. You're waiting for an absolute premium discounted price. I don't know if that makes sense, but you're waiting for the market to pull right back to where the buying pressure started. Jump down to the 1-minute chart and just have a look at the price action. See if you can formulate some kind of trade idea. And often you'll get some kind of something that you're able to formulate a move on. And always put your stop in the low because you're paying for information. If the market comes down and pushes lower like this, you're just wrong. The sellers are now in the market heavier than the buyers. You don't want to be a buyer anymore. Time to cut the trade. Stop losses on structure is what I found has worked best for me. I don't mean to rant with it, but this is like, you know, this stuff works some of the time. And if you can extract the reason why it works, then you can go and backtest it and figure out exactly how to trade it. 5-minute, 1-minute charts are a horrible place to start. Start on the hourly, maybe start on the 4-hourly, and then go from there and see whether or not, hey, we took profit. And then see whether or not it works for you.
Nice. It's always nice to see when the trade you put on before, as live, and it hits TP as we are doing something else. It makes it easy. It makes it look so easy, right? Just click on a few buttons, you wait, you do nothing, and then, it spits out money. Although that's an illusion because it doesn't show you all the effort you put in to get to this point. It doesn't tell you how many hours you put in to be able to to know exactly where to enter and where to put your, your exits and stops and targets and stuff like that. But great. I think the audience is our people in the audience are loving it by the looks of the comments. So let's do
Just
the
quickly, just before you pivot on that, I
okay.
want to highlight this because this is the reality of trading. We'll jump down to the 5 minute chart. This,
Mhm.
sure, trade went up. Okay, cool. But look what I sat through. We're going up. Maybe we're $2,000 in profit. Who knows? Market comes back down. Maybe I'm $500 at loss. Market comes up,
Mhm.
misses the take profit. I'm probably 6,000 in profit, give or take. Now the market sells lower. Now I'm back to break even. Imagine how we feel when we're going through this roller coaster. And obviously, I'm using fake numbers. They're not the real numbers I'm trading with. But this is why it's so important to have a trading account that is small as your master account. I saw it said in chat earlier, what's easier to pass, a 5K account or a 100K account? Think about it. Is it easier to watch $50 go up and down or watch $1,000 go up and down? I would much rather watch this trade go up $30 in profit, go down to $5 at loss, and eventually hit maybe like $60 of profit. If this was $1,000 master account, yeah, that's going to suck. So give your psychology a break and consider using a smaller account. And yeah, just sorry, I just want to say that before we pivoted because this wasn't a clear cut straight to take profit trade.
Yeah, that is indeed what the I think I've mentioned that too. It is something that I also teach or talk about, is that the floating P&L shouldn't be something that triggers anything in you. If it is a relevant, if it is a big number for your daily life, you probably will have some kind of reaction. You will have some kind of trigger. You will have a moment of weakness at some point, saying, "If I close it now, I would have gained whatever what is important to you. Maybe a week's pay, maybe a month's pay." And if when the floating um, when the floating P&L is that big, it's probably good to do something like Rich just mentioned, that mind hack where you have your master account being an account size that does not tickle your emotion. It does not trigger them. It doesn't tickle you anyway. If it goes up or down, it's just a little number. It doesn't, elicit any kind of strong emotions that will make you adjust your behavior. Because when you do that, you start losing the edge. Because that wasn't something in your trade plan. If it's not in your trade plan, why are you listening to it when you're trading live? That does not make sense. Doesn't make sense. Although when you're in that moment, you forget about the trade plan. You say, if I take this 500 or this 2000, I can do whatever with this money. But if you keep doing that, you probably will, deviate from your plan, and you might start trading without an edge, and that's only going to be a matter of time until everything comes crashing down again, and you wonder, why does this happen to me? Why is the market so mean? It's not about that. It's about sticking to the plan. It's about being disciplined and not trying to um, be smarter than your trade plan. Your trade plan
Mhm.
was there for a reason, and everything in the plan is, if you did your homework well, was based on something. So stick to it. So I think, yeah, that mind hack is a great tip right there. So everyone in the chat, if you like our content, if you like us discussing these kinds of topic, and you want us to keep on bringing uh, uh, traders like Rich, but other guests as well, to share with us their how they look at the market, how they break out the market. What are they those uh, tricks and secrets, how they manage mentally, but also technically, how do they extract edge from the market? If you want us to be able to do that, show us your appreciation, click on the subscribe button, and that will help us reach more people. And the more people we have, the more viewers we have, the better we are able to keep on bringing you good content, quality content that will help you to keep on growing as the trader so that you can reach those goals, make a significant change in your life, and reaching those dreams we all have, right? Independence, financial independence, helping your family, if that is something that you want to achieve, or all of those great things. Why we sacrifice our time instead of doing something fun, right? Something else fun. We do this because we have a vision we want to reach. We want to be perhaps, I don't know, maybe help people around us. Maybe we have kids. I don't know, whatever. It doesn't matter. Whatever your dream is, this could be a way how you grow as a trader and help you achieve those dreams. So click on the like button, subscribe to this channel, and help us help you further grow your trading potential. All right, so let's see. Let's go to the charts. Would you like? I will do some analysis. I'll do some analysis. Let's look. I'm going to do. I'm going to show my chart, and let's talk about. So because you have been talking about EU, I think maybe it's better you talk about. You do the top-down analysis on EU, or at least they're going to be very similar. But I'll leave that EU for you. Then I will go to GU. I have, before I do that, by the way, I have the same kind of experience that you mentioned, Rich, where you started with all of the pairs, and you ended up with just two, which were the most profitable pairs, at least from the time that you were testing out your strategy, and you only trade those two, and now you're adding DAX with a different strategy as well to it. Me too. I didn't have exact the same journey, but it's very, very similar. Where I measured how my profits, or how my profitability is when I trade one pair or maybe two, and compare that when I trade all different pairs. And to me, it was very clear. I need to focus, and I know that there are more opportunities at other pairs, and that is fine, but I need to be able to execute my plan as good as possible. And if I'm going to focus on many different pairs, I notice that the quality of my execution isn't there anymore. It's not that high. Instead, when I focus on just one or two, that I'm able to actually stay very close and execute my trade plan almost to perfection. And when I do that, that's when I'm able to bag profits. So to me, it's very simple. More opportunity does not mean that I'm going to be more profitable. I just have to make one trade at a time, and one pair is plenty. And now I use two, and there happen to be the same EU and GU. Though they give me enough opportunity, and if I want to, I could add a third one, which I may in the future. But right now, I have enough with EU and GU, and it's more is not always better, and in trading, a lot of times more is even less. If you think about it, you focusing is the simplicity is very, very important. And to me, that's one of those principles at work, where you just focus on one and two pairs, and you have better results than being all over the place, thinking that's going to help you much better. All right, so I'm going to show my chart this week. What do we have this week? Let me check my let me see. I'll have this is my chart, of course, on GU. On this week, we have, today we don't have any high impact news, but tomorrow we have pound news, and we also have dollar CPI on Wednesday, and on Thursday we have PPI, and actually we have also the monetary policy statement for euro. So those are the most important things to be watching on. They're going to be on Wednesday and Thursday. For dollar on Wednesday, and Thursday will be euro and dollar as well, about 15 minutes apart. So it's going to be very interesting this Thursday to see how the market assimilate all these numbers as they come out. All right, so what do I see? If I start on the higher time frame, I'm going to do it. I'll try to do it like a short review of what's we're happening. We are on a monthly supply zone, right? No question about it. We haven't invalidated, at least not in my way of looking at the market. We haven't invalidated that yet, but it's clearly that the impulse is to the upside. The bigger bars are to the upside. That's on GU more so than it is on EU. And looking at the wicks, I see that the order block is having a hard time holding up. Those are the things that I see. Anything than that, I don't see anything else. On the weekly time frame, we don't have any order blocks, at least not nearby. The closest we have is a weekly, which is far not relevant currently. Other than that, you can clearly see who is in control, right? Where are the impulsive moves here? And there's nothing yet in this price action that tells me that this has changed. It may change in the future, and quite possibly it may have changed already, but we don't have any evidence on that. So if I can't, one of the thing is I only trade what I see, not what I think, what a possibility. If it's not showing it, then I probably will not be able to act upon it. It has to give me some kind of a clue that it is shifting, that it's breaking down, it is forming bearish structures, and it's not doing that. So if it isn't doing, then I'm going to have a bullish weekly bias, as long as it's having higher highs and higher lows, and where the impulses are up to the upside. So that's the weekly, and that's very clearly. Let's not spend more time on that because it's very obvious. What else do I see if I see this, right? If I go a time frame lower, what did the Friday price action teach us or tell us? Well, I'm going to take away a couple of structures here or things that I put in. What I see is we have a very interesting price candlestick combination. Let me know in the chat, everyone, what kind of price action candlestick combination is this? If you guys have been following our stream a lot, you know how I think about different kind of candlestick combination. This is what did I encircle right there? Let me know in the chat to see exactly, Henry. Thank you. That's an outside bar. Yeah, that is an outside bar. And what is an outside bar for everyone who is not familiar with that? That's a two candlestick combination, right? So you have, this is candlestick number one candle, and this is candle number two, and the range of the second candle takes out the range of the first candle. And let me point that out in a way that is visibly easy to everyone. Let me make this a little bit wider and bigger, right? So you have, this is the range. This is the range depicted by the horizontal yellow lines that indicates the high and the low of bar number one, right? And you have the outside bar where it goes outside the range and closes. That's the other requirement. It has to close outside. And that's a very, very powerful candlestick. And the place it does that, I'm going to take these, let me take these alerts away because they're not very relevant anymore. The place it does it is, I think, is important. We don't have any order blocks to the left, and we don't have, even if we go to a higher time frame, we don't have anything to the left to explain why it rejected this level. However, if you go to a lower time frame, and I will go to this, I was looking to sell a structure we had here, but it happened in a way that I wasn't able to capture. I didn't had an opportunity to capture a short from it. So, but yeah, so we have a lot of selling pressure coming into the market, and I was waiting for that. This happened on Friday for NFP, so it is logical to have an expectation of price going in the future, in the near future, to go much lower, since the results of a major event, which was NFP, indicated by the formation of the outside bar that the sellers took over at this point in this order block. Let's see, what else do we have? I have this quasi, which is the reversal pattern that I always talk about, and we had higher highs previously, an established uptrend. We break the neckline, we go all the way down, and where do we go retest? If you actually, let me put in the fib, right? Where do we have we have a couple of order blocks in there. We have a on the H4, we do have an entry here. I think it's on a you can't see it on this price feed, but there is one there. And there is another order block here and a third one there. I personally, I have specific rules when to consider this one because it's crossing the 50% retracement. So I don't take all of them, but I was expecting some kind of reaction on this one or to the last one. And it did have, and all of it happened very quickly on NFP, but I was expecting a rejection of this. And that's exactly what happened. And we got confirmation when it closed as a bearish engulfing on the H4, which was also what happened on the daily, as you can see here, right? Which is the outside bar. So to me, this indicated, or at least changed the probabilities of the market going to have a bearish tone for some time in the future, right? The bigger time frame is very bullish, and that hasn't changed. Even with that outside bar, that doesn't change it. So the trend in the buys on the higher time frame is still bullish, but on the lower time frame, I can see now that with this outside bar on the daily, that we're likely to come back. Either we're going to continue, right, without a pullback, a significant pullback, or we're going to come back to that order block, which is formed by the outside bar, right? We have an outside bar here, right? That's the new order block, bearish order block that has been formed. We might see this coming back and then move away from it. How far is difficult to say, but as you can see, I'm already have some kind of targets below us to indicate a macro target because of these structures exactly. So that is my plan, and you can see that I also had a bullish reversal, right, which is different than EU, right? This is the bullish quasi, and but that quasi, we had at the Monday open, I mean the London open on today, it broke the last structure that it had to reverse from, and actually already it closed below it. So to me, this reversal pattern is already broken, right? So a bullish reversal gets invalidated, that's a bearish sign. So that's another indication to me in my way of reading market that we're probably going to see some lower prices. Maybe in the near future, maybe tomorrow, but maybe it's going to take a couple of days, right? So to me, that's the breakdown of how I see the market. So I could expect something coming back and then moving away from it. That's one of the scenarios that I'm looking for. And if I go to the lower time frame, I don't see anything else except that if it gets to this area, that's where I would want to be selling it. And if it gets to the higher one as well, that's where I'm going to be using that top-down analysis. That's where I'm going to be looking for my opportunity. So basically, that's why I said at the beginning of the live stream, I don't think I'm going to have either one of these areas forming structures or signals, I should say, for me to enter. But that's on EU. I'm sorry, on GU. So would you like to look at your EU on do a little top down, perhaps? Maybe you can find
Yeah,
other
sure.
structures, and let me put your screen on.
Yeah, sure. I'll go ahead and I'll clear this off quickly. So just before I do, I'd marked this up and said, "Is this an order block?" Some traders would say, "This is your order block." Other traders would say, "Nope, your order block is actually this little red candle up here." I'm gonna give you a different idea. We were looking for the market to pull back. We're seeing a little bit of selling pressure. I do think we get continuation to the long side, but let me get rid of this and I'll show you a quick concept before we dive into the higher time frame. So we were looking at this. There we are. I'm just going to get rid of extend right. We were looking at this being a potential order block, this bearish candle. Other traders would look at that little red candle. I like the red candle, but now go ahead and put a structure break to the downside, put on your replay tool, and pretend this is all you see at the time. Where did the volume come in? So we're in a downtrending market. Market pulled back into this supply area here, continued lower. Where did the real volume come into the market? Is it in this little candle? Market had 15 minutes to make its mind up. I mean, it reversed it, but the volume, in my mind, came in on this candle. So these are the kind of things I look at when traders look at order blocks and they start trying to figure out, kind of where is the last place where price turned. I look at where the volume came into the market. So this would be an interesting candle for me. Now that we've pushed to the downside, if the trend's going to continue, it makes sense that we would be moving like this. And then you obviously just continue to look into this area. Now, what I find super interesting is where you have a change of character. I think we call it the I'm not going to say the name, but the COC, change of character. So when the market moves lower, you've now got just a continuation. So I'm looking at the market trying to find out where does it get exhausted. So if we look at the 15-minute chart, it would make sense in my mind that this bearish candle that had all the selling pressure in it moves so quick that there's a good chance that more sellers are willing to get involved in this. If you had a lemonade stand on the beach and someone looked at it and in a day that person sold 1,000 units, next day there's probably going to be 3 lemonade stands, 5 lemonade. Everyone's going to try and get on board that. So as retail traders, we don't get the benefit of trading live and moving the market. What we get is the hindsight where the market's now moved lower. What we get to do is look back at this price action and go, okay, well, where did the selling pressure come in? Right here in this candle. So when the market pushes lower, I've already got my zone that I want to trade from. If we use the fib, I'll never get this right. Nope, upside down again. Let's go from the low to the high. So if we look at the fib, we can see that my zone pretty much puts me in a 50% retrace. Smart money concept, maybe ICT concept, but for me, I'm just trading a potential supply area, and it's in a, do we call this a discount? No, this is a premium, isn't it? A pullback and a continuation lower. So something like this, because this is where the volume came into the market. So we'll just play the candles through. Obviously, we already know what happens. The market comes up and eventually whips into this level. Now, this area holds true right until the market can take out all of that pressure. This is where the sellers got involved. This is where they hit the throttle. This is where we pushed down, made a new low. And this trade idea is valid until the market can take out this high. Because then if you can take out this high, I can very easily look at this and say, we've now got more buyers in the market than we've got sellers. So we've had a COC, we've had a change of character, we've had a distribution between buyers and sellers, and now the market's going higher. So this zone is a great zone. And I'm going to continue to trade from this zone until the market can go higher. This is why my take profit earlier was just making sure that I was not going too deep into this zone. This is why when I had the markup, I was like, I think we see selling pressure in this zone. So when I look at the higher time frames, this is the sort of stuff I'm looking at. So I'll go ahead and delete all this kind of stuff. I don't go to daily. I do 4 hour, I do hourly, and then I do 15-minute, sometimes a little bit lower. So this is a little bit of a awkward one because when we had NFP on the Friday, but watch the market rally to the high side and just follow the structure points to the low. Look for the first time the market actually broke a significant low. Here's your significant low. You could even have this low here. And as soon as you get this shift, it's like there's no more buyers in the market. Buyers have pushed price from here to here. They've oscillated around, made a lower high. You get a break and close under here. Some traders like to read market structure shifts as this by saying like once you get this kind of pattern, we go up, we pull back, and we get a break and a close under here. That's exactly what you're seeing here. You've got, if I put this over here, can you see the pattern? Market drives up, pulls back. You get a lower high when you break and close under this level. So using this stuff in how I read price action, if I want to be an early seller right here, select the bar. This is my first opportunity. Why? Because we've made I've got to get this right, because a lot of the time it's just an internal dialogue, so I need to make sure that I explain it correctly. We've got a lower high once the market breaks and closes under here, but we've also got a whole lot of buying pressure that come out of this area. So I typically don't trade this pattern too often, but what I want to see is the market break and close under this. When we break under here and we close under here, if I can just get under, we'll find the candle that does it. There we are. We've now got a distribution between the buyers and sellers. The buyers, they all brought here and they had another go of buying here, pushed up higher. The market has finally shifted. We've got bearish intention and a confirmation that there's now more sellers in the market than buyers. Price doesn't get down here without more sellers coming in than buyers. You have to wipe out this volume to get down here. We've now seen it. I've got my directional bias. I'm now going to be a seller. So my job is to try and figure out, where do I want to sell from? Well, I don't like selling lows, so I'm not going to be interested in selling this. It's 120 pip stop loss. That doesn't interest me, but I've got my directional bias. If we jump down to a smaller time frame, like an hourly chart, we can see, where did the volume come in to take out this low? Borderline, you could say it came in on this bearish candle here. I don't like this bearish candle as much because we get a pullback. We'll jump down to the 15-minute. We'll get a little bit more information. We can see that we get a pullback, market oscillates, and right here is where that bearish pressure comes into the market. So I've got my bias and I'm looking at this pullback and selling pressure. Unfortunately, maybe I can go down to the 5-minute. I'm just king of picking news candles at the moment. They just get bigger and bigger and bigger. But a pullback into this zone on the 15-minute or the hourly would make sense for a continuation to move lower. If this zone fails, I would then be looking like higher up. How much volume came out of this move down? How much volume came out of this move down? And we can already see that this level here, look at the biggest bearish candle from there to there. You can already see we've come up from this level here and we've defended this candle. So as Victor was saying, you've got a transition from buyers to sellers. And if the market is now bearish, you shouldn't be breaking through these bearish candles. You shouldn't be going above this price point. So I'd be interested in picking this as a zone and then trying to follow the market down as it moves lower. Now, the cool thing about this is we get NFP come out on Thursday. We'll run it through because we know we get NFP come out on Friday. And the market doesn't care about these price points when NFP comes out. It just blows through them. So what I like to do is when you see NFP, which is about now, I think, Friday, I'm miles back. I'm completely miles back. But this would be a supply area. This area has already gone. So now I'd be looking, well, we've broken down to this low side. Do I have a nice big bearish candle where the selling pressure happened? And if you look on the 15-minute, you'll see it a little bit closer. The market, here's the low, market wicked the low, and then retraced all the way back right where this selling pressure happened, then continued on its way lower. So every time I want to sell, I'm always trying to find the origin of where that selling pressure happened. And some traders will say you've got to use the bullish candle, which is here to here. I think if you use the bullish candle, you'll miss so many entries. So try and track down where that selling pressure came in. And the selling pressure doesn't happen in the bullish candle. That's the transition between buyers and sellers. In my mind, it happened in the bearish candle. So I just love to mark up where that pressure come in, wait for the structure shift, and then try and find my entry with a limit order for the market to continue. I'm sounding like a trend trader. I'm definitely not a trend trader. Yeah, you can. Every time you get a structure break, you leave behind a footprint of an order block. An order block, in my understanding, is just a block of orders where buyers and sellers grouped up, and for a little while they all agreed price was worth about the same. If we look at this price action here, and we say, for whatever reason, this is our order block, if we look down at the 1-minute chart, all you've got is a consolidation. You've just got a block of orders where price just moved sideways for about an hour and a half, maybe 2 hours, and then finally sellers started to pile in the market. And it's this disagreement where they rally the market in a direction with a bit of volume. That's what I'm interested in. So this is what you can see on the higher time frame. You can see it on the hourly chart, and just mark them up. You got a nice area up here. where the selling pressure started. Maybe we can just put a zone on here. You've got another one here. This is where the selling pressure started. You broke structure to the downside, and just follow price through and see how many times you can follow this trade idea. If we just extend this across and see how many times these areas hold. And what you'll notice is often, unless it's news driven, the market won't run through them in a straight line. You might get like a lot of oscillation like this, and then it's these pullbacks that I'm trying to catch and scalp a little bit of profit out of. But that's all I'd be looking for a top-down analysis, just like that kind of stuff there. Could you short that? Did you have the opportunity to go and profit? Could you make a bit of money? I think so. And so when we push and break up to the high side like this, if the market rallies higher, nice and simple, I've now got a buying bias. And so all I'm going to do is just mark up what I believe to be like the footprints of the buyers. Could be here, could be another one just down in this zone down here. And I'm just going to wait and be a buyer where, like, on the edges of the market, but only where the volume comes in, not that sort of choppy stuff. I'm not interested in that. I'll run it through to NFP, and then you'll see just how kind of crazy this stuff is when, where is it? Thursday. I think we're now hitting Friday. There we are. So we can see that we came back into this zone. We found a interesting rejection from it. Is it luck? Go and find 100 of them and chart them down and just say, look, if I put my stop in the high where I'm wrong, how many times could I have formulated a trade idea in this area and been profitable? And then the entry criteria, you know, there's as many entry criteria as there are numbers in the alphabet. I think you can just letters in the alphabet. You can just be so creative with this stuff, but it's not a fluke where price goes to and then oscillates around. And often it leaves these kind of like footprints and order blocks and stuff like that. And this going all the way up to here, look at these lows right here, drag this line across, jump to a higher time frame, maybe a 4-hour chart, and you'll see that all this is just where the selling volume came out of a higher time frame level. And it's just anyone who bought in this price point here probably wanted to get out and break even. Anyone who was selling this volume through here come through with so much conviction, the market came back and got overwhelmed and then sold lower as well. So just sort of like simple stuff. Just go and look for structure breaks, follow it back, look for bullish, bearish candles, and look where the volume came in and just see if the market reacts from it. We never got down more than the 4-hour chart, but yeah, if I'm having fun with it, I'm down on the 15-minute chart, and that's what this was this morning. It was me just trading 15-minute charts, waiting for structure shifts, and then looking at 5-minute and 1-minute for entries as well. Same stuff, but don't start on the 15-minute. It's a little bit choppy. Start with the 1 hour and just look for supply and demand zones. Did that answer the question? I just went off on a massive tandem.
We enjoyed every little bit of it. Don't worry, Rich. We enjoy your everything you can tell us about how you approach the market. I think the audience love it. I have a so let's see. I will change the screen. I will show my screen. But I have a question that we have. Before I say so, we have a section in the Discord community, our Discord server. For everyone who is not familiar, we have a Discord server, a Discord community, which is a great community that you get access to once you have an account with us, right? Just have to buy any account, doesn't matter the size, and you get access to, within the hub, you get access to our Discord community, which is, I believe, the greatest thing for a trader, to be among traders who want to help you, who are in the same boat, trying to be better as a trader, become better. And Rich is there having workshops explaining how he trades and helping traders, and myself as well. So we and others, not only the two of us but others, and there are many people there trying to help you to become better. But the question where I was going to with this is, we have a section where you can submit your questions, your setups, and we will select a couple of them and show them on our YouTube channel. And today we have this question from Joe, our great friend Joe, who is a very active member in our community, asking this great question. And I think we have about 10 minutes left in our stream. I think we can talk about, for sure, we can discuss this question. Um, Eric asks in the chat, are we going to have giveaways today? Um, Today we will not have giveaways, but we will have knowledge giveaways. So stay tuned, and you will receive a lot of that. All right, so let's see. We have uh, Joe asking, I've been hearing about collecting data for trades. Can you help me give insights uh, on what kind of data we should collect and have to shape our trading? Thank you, says our esteemed member Joe. Rich, would you like to maybe, or would you like me to go first? Go ahead. Since you have been talking, maybe I should go first and give you a
Please,
little bit of a
you go.
rest. All right. So, well, collecting data is Joe, our good friend Joe. You're hitting on a very, very important section or basis of, to me, what trading is. Trading is not about emotions. You will have a lot of those. It is not about winning big or being quicker. Sometimes it is, but that's, to me, that's not what it's the essence of trading. To me, the essence of trading is in the data. And it may sound weird because, data doesn't sound sexy at all. It doesn't sound that attractive, right? It sounds something like in the direction of math and statistics, and maybe you like that, but I think not everyone likes it. But to me, that is what trading is. It is about something that is repeatable, something, a pattern, and it can be in terms of price, but it can be in terms of time as well, not only price, where there is a succession of things happen in a certain sequence, right? After, let's say, a very simple thing, what happens? You can ask yourself, what happens after I see a phenomenon in the market, and and by answering that, what happens typically, right? Normally, like if you take 100 of those incidents where that phenomenon happens, and that phenomenon can be anything. Um, what happens more often than not, right? To me, that is what trading is about. It's finding patterns that you can recognize and trade, because once you recognize them, you have an idea of what is likely to happen in the future. It's not something that's going to guarantee you profit, but if it has edge, and that we'll be talking about, it is something that more often than not will give you profit. And if you do that often enough, it will produce profit. And to me, that's what trading is. Trading is finding those patterns and recognizing in the future and execute or frame your trade based on that pattern that you have. But how do you, coming back to this question, how do you collect data for your trades? How do, in my mind, how do you quantify those patterns? Right? That's one of those things, because before you can even, okay, you have a pattern and you want to recognize it, you have to define it, right? You have to measure how often it happens, measure how often, how far the market goes when that pattern occurs, right? Before you can build and structure a plan, a strategy, a system around it, first you have to collect. And that's the question here. How do you, what do you do when you're collecting data? What kind of data are you focusing? Well, to me, it's one thing is you got to have an idea. That's the phenomenon, right? The pattern that you see. And then you start measuring, that's the data. What happens after that phenomena? After that, it can be an order block, can be a structure, it can be a news event that comes out, right? Anything that, any incident or event, specific event that happens many times, right? So because you have to go back in time and measure, okay, what happens in 100 times that I see an order block, for example. and you go and measure what happens at the end of the day, perhaps, or the end of the hour, depending on the time frame you have, and how many times does it react in a certain way. Does it go up or down? I will let me see. I have my let me I have a very maybe something that could help. Let's see. I got a something that I used on a workshop on Discord. It's this, right? This is an engulfing, right? The candle, bearish candle, and we have a bullish candle being much higher and closing up on this bearish candle, and that's the engulfing. And to me, that's the order block, right? We can have different definition for the order blocks, and it's okay as long as we consistently use the same definition. But for example, in this phenomenon, right? This in this case, it's a structure. And what I would go collect data on is how many time after this happened does price come back into that area. That's one thing that you could collect. How, and you have to define it within a certain number of bars, right? So that's something you could collect. Go check the last 100, 200 order blocks, and how many times does it come back within a certain number of bars. The next question you ask, those times it comes back, how many times does it exit the order block on this side? How many times it exit on the other side? And by exit, you have to define that. Is it a close or is it just a wick, right? It's your choice. It's your data. And then you start building, you start getting that's data. You get data points. You say, for example, okay, within I don't know 20 bars from the creation of this order block, let's say 30% of the time it comes into it again. Okay, so now you have some idea. Okay, about 1/3 of the times it happens, it comes back to a retest. That's what I call a retest. All right, now the other question, how many times does it close on this side after it comes in the first time around, the first touch, first retest? How many times does it close the other times? The other, I mean, below it, right? And you start getting an idea and you start seeing the pattern emerge, which I trade all day, which is an outside bar, price comes back into the order block and then moves away from it, right? Once you start building, but you have to start with data. The data is you measure the effect that a certain pattern or structure has on price going forward. And that can be anything. Doesn't have to be an order block, of course. It can be anything. It can be NFP. How does NFP affect price? Of course, it moves a lot, but is there something that happens more often than not, specifically at NFP? And once you start, scratching the surface and finding that pattern, once you start, okay, this is a pattern. Once you identify that, you can start building a system that tries to capture that pattern or that effect that you expect after that pattern, right? So data collection is, to me, the way to be profitable. And what kind of data? It's something I know I haven't said anything concrete, but it is, you have to measure the effect that a certain phenomenon has on price. In this case, a structure. As I said, it can be a time incidence, it can be a chart pattern, it can be a candlestick combination, as this is. It can be an outside. It doesn't matter. Just start somewhere, something you think that has an effect, right? Test it out, and measure how many times it does that what you think it should do, how many times it doesn't do that, and keep on going. Keep asking yourself, okay, how can I have how can I identify those, let's say that when an order block is created, uh, 30% of the times it comes in back into the order block, and from those times, about half of them it goes this way. If that is the case, uh, how do I recognize those times as it is going to do that, right? So I try to minimize the losses, and I only get into not the correct one, but the ones that are forming a reversal. By asking you that question, and by having a toolbox You say, okay, let me see if an indicator will help me. Let me see if a chart pattern will help me. Let me see if a how do you say that, the divergence will help me. What if volume profiling will help me? What if you start asking yourself those questions and you test them until you find, and probably you're going to be 400 hours like Rich, um, after that, while you're doing that. But after a couple of hundred of hours doing this, and maybe less, but it probably takes a long time, you will come to the conclusion, okay, this is adequate to capture that move, and you start, crystallizing that system. But it's all begins on collecting the data, asking the right question, and then looking for ways to measure the effect of whatever you want, the phenomenon that you want to recognize in the market, the pattern. That's my take on collecting data. What would you answer? I know I covered perhaps a big deal of what you may want to tell about. But what can you uh, tell about this question, Rich,
I'm going
before
to
we
try and
wrap up?
speed run this because this is a absolute massive question. And if you,
It
Victor,
is.
if you go ahead and pull up my screen, I'm going to try and give you a
Sure.
little bit of context on this. So collecting data in itself is a skill. On day one, you're going to suck at it. On day two, you'll suck a little bit less than day one. On day seven, you'll be a little bit better than that. So when you're collecting data, keep it so incredibly simple. And what I would encourage you to do is take, as Victor said, find an anomaly, find an event. So for this example, we're going to use outside bars. We're going to use an engulfing candle that takes out the previous candle and has a wick to the downside, right? Super, super mechanical. You should spot this with an indicator. You could spot this manually. You should never, ever be able to look at this candle and go, that's not an outside bar. You can see it's wicked the low and it's closed above the high. So for this example, go and find 100 of these. Nothing else. Just keep it incredibly simple and say, every time I see an outside bar, what if I just buy on the high and I put my stop loss on the low? What happens next? And then record that information. So the idea with this is that you only add one ingredient into that pot. You try it, you make sure you don't get food poisoning. The next day, you've now got 100 of these examples, and you go, do you know what? If I aim for one-to-one take profit, which would be here, you can do it in TradingView with the replay tool. How many times did I make one or lose one? And so we build out a column that just says +1, -1. How many times did I make two or lose one? And you start to gain these insights, but it's based on a one ingredient component, just one entry criteria. I take every single outside bar, regardless of when it prints or whatever, and just have a framework. Say, I'm going to go from 8 in the morning till 5 p.m. at night, because I'm not going to be a slave to the charts. I'm going to work it as a normal job, and I'm just going to record every outside bar that records in that time. Let's see what happens. Well, it goes up, it goes to stop loss. I go to my spreadsheet, I write -1, and I'm going to go and do this for 100 times. That's one component. Then I'm going to go back and I've recorded my entries. If we look at the bottom of the screen, you can see that this candle was 10 a.m. I'm going to go back and I'm going to refine those 100 candles, and I'm going to say, what if I didn't go for one-to-one? What if I got out at, maybe an order block? I could have made 0.8. And you ask that question and you compare that result next to the previous result. What you're doing now is you're adding in a second ingredient. If it's not profitable and you've got food poisoning, you throw it in the bin. You say, that's not a good ingredient. That doesn't go well with my outside bar. Or you go, well, what if I didn't take the entry on the outside bar? But what if I took a 50% retrace and I only took a limit order? Now you record that result next to your outside bars. And over time, what you're doing is you're comparing different data sets and asking questions to quantify, is there something about this outside bar that you can find that's profitable? And you might find that a 50% retrace is profitable. And you go, well, why? Why would this retrace be profitable based on an outside bar? What happens internally in an outside bar? And then you can look at all the trades that failed. Well, what happens if instead of the outside bar, What if I wait for the outside bar to fail and then I just trade with a limit order limit order short? So still using the same outside bar, you go back through 100, wait for the market to wick you out. What if you put an entry here? What if you traded like this? And you now traded like a fail of the outside bar and a continuation to the downside. You can look back and see whether or not, this sort of stuff is profitable. And you can find these themes and these truths and find out whether or not this concept is good. You've got outside bars, you've got fib pullbacks, you've got RSIs, stochastics, moving averages, you've got fair value gaps, you've got order blocks, breaker blocks, supply and demand zones. You're literally is limitless, the amount of concepts. But what I would encourage you to do is start with just one. Just start with one simple ingredient and go off and record information about what happens if you took just one entry criteria 100 times. And you might find you found one ingredient that's profitable and you can sustain your trading career on it. But I was never able to find one ingredient that was profitable. I had to use a mixture of things like this with other concepts to try and find that perfect blend. And that's what we call time in the kitchen. So that's the 400 hours of chef's recipe to try and cook that masterpiece. But yeah, realize that collecting data when you've got 9 different concepts is incredibly confusing. Go and record 100 of just one simple technique and then go back and look at it, ask questions and try and make it more profitable from there. That's how I would approach it. That's how I have approached it.
Nice. Very, very well said. I think, Rich, you have shared a lot of great insights while doing that, picking one thing at a time, testing it, and adding one thing at a time and discarding it, or adding and leaving it in, and look for the next component of your system. I think that's a great way. And that's how you do science, how science goes forward in with experiments. They leave everything else equal, and they have just one, sometimes it's more than one, but typically one variable that they change, and they see the results. How does this one thing changes the results of the experiment? And with that information, you come to some conclusion. Okay, this helps, it doesn't help me. And then you either discard it or you include it going forward. And then you go search for the next component, the next thing in your system, and until you have a system that is well-rounded, that is able to be, that is robust. And you test that, of course, in different market conditions until you're confident, and then you go start executing in real time. But I think that is indeed a huge topic that we certainly need to touch more often on, Rich, and we will be doing that for sure in the coming streams. But we have come to the end of our live stream, guys. I always, when I start streaming, time flies by. It's they say if you enjoy something, you lose track of the time, and I think that happens with a live stream. So I would like to thank you, Rich, for all the great insights you have given us today, and for explanation, your analysis. So on behalf of our audience, thank you for being here and sharing with us, the lessons you've learned in those, hundreds and thousands of hours, and so that they, for the benefit of our audience. Thank you for that. Do you have any last comments, last things you would like to mention before we wrap this up?
I've got one thing. That could save you a world of pain. First of all, Victor, thanks for having us on. It's been an absolute pleasure. Don't look for perfection. When you're backtesting, when you find something that's just a 1-to-1 at a 60% win rate, stop trying to make it 100% win rate. Just accept that trading is a probabilities game. Good enough is good enough in trading. If you have a small edge and you can execute on it relentlessly, manage your risk, you should make profit over time. That's it. That's all I got.
I think those are legendary words. Thank you for that. Everyone watching us, remember, hit that like button. It is in your own best interest. The more likes we get, the more views we get, the more people will be able to see us, because the algorithm works that way, that the more people like our shows, it will be shown automatically to more people. And that means that we will become, we will have the possibility to bring even more content to you for your growth, so that we can reach those dreams, those goals together. So don't forget, hit that subscribe button, that like button as well. And we see each other in our live stream tomorrow. Stay tuned. We will have this. We have a lot of great guests in store for you. So don't miss our next show tomorrow. All right. So that's it for us. See you guys tomorrow. Bye bye.
Cheers.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one. Hi guys, so thank